Okay, here we go. Summertime. Okay. I want to say thank you for tuning in. Mondays, I don't really execute. Today was one of those days. If you do think about trading, you think about how many times you need to execute or how many times you should execute. After some time, you'll realize that when you don't execute, it actually saves you money. Because every time you execute, or anytime you participate in the market, it's an opportunity for you to lose money. Do you know what I mean? So, with that in mind, some days, depending on how you trade, if you choose some days not to trade, it'll actually improve your win rate. But anyway, let's get into this. You can see price action. Remember, this grey shaded area I've got here is for Asia, and then I've got price. I mean, it's pretty much sell side, especially because it's got some previous structure to the left. You can see here 2:35. This is all London time. You can see it as like a double bounce or what have you. Usually you'll most probably see an FEG here as some support. Let's have a look. Yeah, we do. So let's say boom, we've got FEG here, got a double. Oh, that's not FG. 1 here, 2 here, boom, as support. Then we've got a 1, 2. It's moved off, boom. So okay, cool. You can say it's sell side as opposed to like internal. Regardless, because it's not moving at extremes, I don't like it. With just watching or looking at price now, I can tell that price isn't at any extremes because it's in like more or less internal liquidity for Asia. If it didn't have the structure here, then I'd say it's internal. Do you know what I mean? It's nearing sell side, but it's not. But let's go to daily and do some analysis. Come on. I'm doing this all off my mobile team today. You can now see why it is a tad annoying doing it off the mobile. Thank goodness I didn't actually trade today, so I don't actually have anything specifically to show you. Alright, cool. I'm going to leave it like this. If it loads, it loads. If it doesn't, it doesn't. Regardless, I'm going to break it down. In my last short, in fact, my second to last short, you'll see us speaking about Mondays. So Monday is a probability. After you know you've got a strategy, you want to have a look to see if price is actually moving in your favor. If price is moving in your favor, then you can execute. Usually, when price is in your favor, then that means price is interacting with a certain key level. So if price is moving off a certain key level, and maybe 2, maybe they're very close, you're counting it as a double confluence, then yeah, boom. You're waiting, you're relying on your pattern recognition, and then you're going to execute. While price is all, while this is in between your watch time, your kill zone, your trading time. Mondays, I always teach Mondays the same. So, I liken it to opening the tap. When you open a tap, you don't get a consistent flow of water. In the beginning, you get spurts. You treat Mondays more like when you open a tap. Flow of money from the institutions, it's the first day of the week, Monday, first turn. And you're not expecting a full stream. You would expect a full stream if you had already had the tap on not too long prior to, because the pressure's somewhat still built up. So that would be like if when price is at a key level or double or whatever, at a label, whatever you want to call it, that's when you execute. That's when you already know there's pressure. You smell me? Okay. In regards to Mondays, again, I don't really speak much about Mondays because there's nothing to talk about. I actually don't trade off Mondays a lot. We did see price move last Monday off the higher time frame FEG, but the probability is low, so I don't really like to touch it. Again, it's Monday. We'll have to move like water. You guys tell me if that's a bad accent. If you don't know where that is actually from, you gotta get to know. Goodness, shame on you. Yeah, that's actually funny, actually. Yeah, must move like water. In fact, I'll even elaborate on that one before I quickly shoot off. Sometimes you need to move aggressively. Sometimes you need to move more defensively. And you can liken that to prop firm trading, passing a prop firm. Aggression will come or be used when you are during your evaluation phase. Your eval phase is when you're hitting your targets. You've got your typically 8% and your 5%, sometimes 10 and 5 or what have you. When you implement a defensive approach, it would be once you are funded, because now you're tweaking your risk management to make sure you don't lose the account, as opposed to in the beginning you're a bit more aggressive because you just want to get funded, because you don't want to waste time getting funded. If I find, for example, like I speak to students about choosing cheap prop firms, it's not really because it's so cheap and affordable. Of course it is from an overheads perspective, but it's because I want you to be able to lose the sentiment that students typically have with prop firms. I want you to get through them. So I'll show you an example. So if I buy a prop firm at Maven 5k instant funding, £20. If I start trading it and I blow it, then I know it's fine because it's only £20. Whereas if I've got the whole, let's say, I know this, again, I'm going back to this guy because that's what's on my mind. The trader, what's his name, Winners Evidence, trading a prop firm account, challenge rather, for like 4 months. That's way too long. In those months, I could have blown an account and passed another one. I could even have blown 4, 5, but eventually passed one because it's only £20. Do you know what I mean? When I get my payout, I mean, what, the consistency rule or the minimum withdrawals at 150. So if that's 150, then of course I'm going to be making more or equal to the 5 losses, which is going to be £100. Do you know what I mean? In that time, I'm seeing success. I'm getting a payout. In the 4 months, you don't even know if you're going to have been paid yet. Do you know what I mean? Obviously, we trade to make money. And time waits for no man. Hence why we go through evals quickly. Do you know what I mean? And then when we're funded, we move defensively. I want you to also remember that when you're trading your money, when you're trading private equity, I want you to take a defensive approach. Don't move kamikaze. Don't go gung-ho. Don't go crazy. Don't do the mad thing. Don't be over-leveraging. I'm going to be honest with you. Me, I move Super Saiyan Jedi level. Super techie with it. I can risk 10%. That's normal. That's easy. But I've been doing this. I even know when I'm not executing properly. Do you know what I mean? But if you're not there yet, don't do that. Risk heavy on your prop firms. That's what they're there for. Then recycle the money into your primary account, your private equity account, yeah? Don't go crazy on your own Ps. It doesn't make sense. One of you are listening to what I'm saying and you're taking it on board. Contact me, Dylan Kane Rose. Like, comment, and subscribe, and all these beautiful things. I will keep you updated. If you're not in my Telegram, of course, then join my Telegram. If you are in my Telegram, then you will be updated on all of my trades, all of my executions this week. Thank you for your time.